What if I told you that it's possible to turn just $1,000 into over $50,000 without ever touching your original investment? This isn't a gimmick, and it doesn't require a finance degree or hours of research. It's a strategy built on consistent dividend-paying companies, long-term thinking, and the quiet force of compound growth. By the end of this video, you'll understand how to use one simple investment strategy to grow real wealth over time, even if you're starting from scratch. The foundation. Why dividend growth stocks matter. For the past several years, I've studied financial research from S&P Global, Hartford Funds, and the long-term track records of dividend aristocrats, companies that have raised their dividend payouts for at least 25 years in a row. And what that research shows is compelling. Dividend growth investing has historically produced 10 to 12% annual returns, while also being less volatile than the broader market. But the real secret isn't just in the dividends themselves. It's what happens when you reinvest those dividends over time. Think of it like this. Instead of spending the fruit from your apple tree, you plant the seeds from every harvest. Over time, you don't just have one tree, you have an orchard. And that orchard continues to grow year after year, whether or not you're actively adding to it. Start simple. Use SCHD as your base. If you're new to investing, one of the easiest ways to get started is with a low-cost, dividend-focused ETF, SCHD, or the Schwab US Dividend Equity ETF. This single investment gives you exposure to 100+ high-quality companies with a strong history of growing their dividends. It's designed for consistency, not flash. A few facts. Current yield, around 3.7%. Historical return, over 12% annually since inception. Minimum investment, just the cost of one share, often under $100. Diversification, built in, across multiple sectors and industries. If you had invested $10,000 in SCHD 13 years ago and reinvested all the dividends, your investment would be worth over $32,000 today. That's the power of steady growth and reinvestment. No guesswork, no speculation. The real edge? Time. There's a quote often attributed to Warren Buffett. The stock market is a device for transferring money from the impatient to the patient. When it comes to dividend investing, time is the multiplier. The earlier you begin, the more years your reinvested dividends have to grow and generate additional income. Let me give you a simple comparison. If you invest $200 per month starting at age 25 and stop after 10 years, your money still has time to grow dramatically by retirement. But if you wait until age 40 to invest $500 a month, you'll likely end up with less, even though you invested more money. It's not just how much you invest, it's how long you let it work. This is sometimes called the 8-4-3 rule. In the first 8 years, growth feels slow. It's foundational. In the next 4, your investments begin to accelerate. And in the final 3 of any 15-year stretch, growth becomes exponential. Step by step, how to start today. Here's a straightforward plan to begin building your dividend portfolio. 1. Open a brokerage account with a platform offering commission-free ETF trading, Fidelity, Schwab, Robinhood, etc. 2. Search for SCHD and buy your first share. 3. Enable automatic investing. Even a small amount monthly, $25 to $50, makes a difference over time. 4. Turn on dividend reinvestment, so every payout automatically buys more shares. 5. Stay consistent, and as your confidence grows, consider adding individual dividend aristocrats like Coca-Cola, Johnson & Johnson, or Microsoft. This isn't about timing the market. It's about building something durable, something that works while you sleep and continues growing long after you've stopped actively contributing. Why this strategy matters now. In a world full of fast-moving headlines, volatile stocks, and endless financial noise, dividend investing offers something most strategies don't. Stability, predictability, and a focus on real cash flow. While others chase the next big thing, You'll be quietly growing an income-producing portfolio that rewards patience and discipline. To recap, dividend growth stocks increase your income over time. SCHD is a simple, powerful place to begin. Reinvesting dividends creates exponential growth. Time is your greatest ally. Consistency matters more than perfection. If this strategy makes sense to you, if you're ready to start building wealth the slow, steady, proven way, like this video, share it with someone who needs to see it, and subscribe for more grounded, research-backed investing strategies like this one. There's a lot more to cover on building financial security, and I'll be walking through it step by step in upcoming videos. Thanks for watching, and remember, wealth isn't built by chance, it's built by choice. As always, peace and profits to you all.